joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important, and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning. Welcome, everybody, to another week of trading. It's Jeremy Whaley here from Trade Maestro. Hope you've had a great Easter weekend and hope you've had just a great weekend as a whole and ready to jump into another exciting week. And boy, what a crazy market morning we have awakened to today. So good morning to those of you on the West Coast. Welcome to the afternoon hour for those of you on the East Coast, and for those of you right here in the middle of America, happy noontime to you. Hope you're doing fantastic today. We got some great stuff to talk about. In the interest of the crazy markets and what appears to be a bear market continuing, I'm going to jump in today and do a teaching on some bear market strategies. So I think you're going to really enjoy this. I think you're going to get some great value out of it. And for many of you who've been struggling to know what do I do in a bear market, this is going to answer questions for you. It's going to set you on the right path. And, hopefully you don't get scared from these bear markets. They don't have to be scary. A lot of people get scared, but you don't need to be scared from it. So that's what we're going to do today. If you have not already liked and subscribed to the channel, please do so immediately. This is your time right now. Like, subscribe, and follow if you're over on Rumble or Facebook, wherever you are. Do whatever the necessary action is so that you can take advantage of getting all the alerts and knowing what is going on. All right, with no further ado, let's jump right in and take a look at the market itself. You should be seeing my screen here for the Dow Jones Industrial Average. And as you can see, it's a sea of red. It is an ocean of red today. It was 1,000 points just 5 minutes ago. But as of this second, it is... Uh-oh, I don't have my pen here. This is... well, that was a momentum killer. What I'm trying to draw is going to happen here just in a moment, as soon as I get my pen on the screen. Are we there yet? Where are you, pen? Nope, it's still stuck on the other screen. Why are we stuck over there? Well, because it is. Cancel. Move to this screen. Still not moving. All right, go figure. Well, if you can see the big red candle here, that's what you're supposed to be looking at. And you can see that we're down about 1,134 points as of this moment right now. We were down about 1,000 points not too long ago. But now it's 1,100 points. Let's see if that did it. Nope, that didn't do it. Let's try that. There we go. It's really hard. I get used to teaching with my pen. If I don't have it, I feel like I'm naked. There we go. All right, there's the big red candle that I want to draw your attention to. 1,152 at the moment. It is falling rapidly. In fact, if we were to go in here to a 5-minute candlestick, which I'm going to do right now, there's your 5-minute, you can see how quickly it is falling. Intraday right now, as we speak, we are getting a continuation signal telling us that the trade is heading to the downside. This is continuing down. So it is gaining momentum and is gaining speed to the downside. And that's scary for a lot of you. That's why we're going to talk about bear market strategies today. Now, last week, whenever we looked at this, when we left off, of course, we didn't trade on Friday because it was Good Friday, but we talked about the possibility of this being a continuation pattern as we had bounced up into the pivot area here, the main pivot area, and started to continue. What I was concerned about last week, and I'm frankly still concerned about this week, is that it's not a real continuation, but rather we're just going to trade off to one of these pivot points right here and bounce and continue to consolidate in through August and not August, but in through April and into May. That's my initial concern. And as I looked at individual trades last night, which I talked about in our profit picks class, As I looked at those individual trades, what I observed and what I shared with our students last night is we have a lot more trades that are set up for bullish trends than we do that are set up for bearish trends. Most of the bearish trends that can drive the market right now have already got to their support levels, or they are putting in some sort of a bottom, or they've already made the turn to go back in the opposite direction. So I'm really not as bearish as I thought I would be going into the week. And then, of course, we wake up and the market's driving down as hard as it can. I don't know how long this is going to stick, but as long as it's here, it's a bearish opportunity. And that's what we've got to stay with here. And that's the way we have to approach it. So zooming out just a little bit so you have a perspective of where we are. You can see we've already sold off about 17%. Oops, pushed the wrong button there. We've already sold off about 17% from the market high to where we are right now. This is a very, very good location for us to find support. But as you can see down here, your stochastics has now made a very sharp turn to head on down. If we do continue lower, obviously 37,000 is where we hit a couple weeks ago. And then your next really major turning point is going to be below 36,000. So we could have some substantially lower days in terms of your support and resistance lines here and where that shows us. And then the ultimate would be 33. I don't anticipate, or I can't really imagine a situation right now why we would sell off below 33,000 on the Dow, but you know, it's happened. So we'll see. That's why I always say, you just have to wait and watch what the market gives us here and then trade appropriately. We're looking here at the S&P 500 now, and you can see that comparing to last week we were really establishing this pivot point here, and this week we opened the week up and just boom, the bottom fell out there. So this is on its way back down. 4,800 will be our next target on that. Your stochastics target that as well, and 4,600 would be the next target below that. And then take a look over here at your NASDAQ. This is the NASDAQ composite. It is continuing the trend. Everything looks very bearish on this front today as well. Now, this can change rapidly, but as of right now, this is what we're looking at, and you got to be bearish. I mean, there's really, as much as I loved the bullish trade setups we did last night, today we wake up and it's bearish or bust. Those are kind of your two choices right there. So market is definitely heading down at the moment. Next targets here for the NASDAQ are going to be obviously the ones we just tapped into a couple weeks ago. And then we've got, zooming out just a little bit, pretty major support around 14.4 and then closer to 13,000. So this is, getting down into some territory where it may fall quickly. We've already given up percentage-wise on the NASDAQ from 20,000 to, at 1.15, it's about 25%. So, we've had some sizable moves already. And of course, the media is going to say, well, this is just evidence that we have a recession. I don't think in those terms. And one of the things you're going to learn today as we get into our lesson, bear markets tend to go very quickly. We'll flush out a bear market in typically 3 months or less. And so we're already, a month and a half into this. So I don't think it's going to be a full 2025 bear market. But if it is, then we'll have several bounces. We'll have new selling opportunities, and we'll take it from there. The last couple of things I wanted to touch on before I get into our lesson today, I wanted to tap back into gold. Gold did break out to some new higher highs today. We are at another one of our targets, way beyond, well, I set these up last week, but the original targets that we set up, which were these first three lines, 1, 2, 3. These original targets, we've blown past those now. We actually gapped up to, on the ETF, we gapped up to the first one I added last week. The next one is going to be up here around 328 and then 340 if we continue there. Now, we are very overbought on gold, and as much as I like it, you need to be prepared. Gold probably at one of these targets, maybe the one today, maybe the 328 one, maybe the 340, one of these targets, it's going to hit that target, and it's going to reverse very quickly, and it'll come down to around the 20, maybe the 50 period moving average, probably fizzle and fazzle a little bit, then get a little bit more energy, and then maybe we can continue the trend. But we're very overbought right now. And so if you are trading gold, keep those stops tight, lock in your profit, and get ready for a quick reversal that can head fake you there. If you leave it too wide open, then you just end up giving all your profit back, and you say, well, what's the point of trading? And that's a great question. What's the point of trading if every time you have a profit, you just give it right back because you're buying and holding infinitely? There is no point to that. So that's where we are on that. Other individual trades, I don't have time to get into them all. So, that's where we are. We just don't have time to get into all of them. Costco took a pretty big surprise today. I will talk about this one quickly. I was pretty optimistic about Costco. And then today it just absolutely has done the opposite, down $43, which is a 4% move. So it never triggered our trade. It's no harm, no foul. But this was one of my favorite trade setups last night that did not go in the direction we wanted it to go. So just a FYI for any of you who were in the class last night, pretty optimistic about Costco last night, but this morning it's like, well, maybe we'll rethink some of that, and let's make sure it confirms. And by the way, this is why we wait for confirmation. We wait for confirmation. We set up a trade in anticipation, but we wait for confirmation before we execute, because it increases your probabilities of actually being set up right and watching the trade go in the right direction. All right, that's my big picture market overview. If you got any questions about that, please type it into the chat. Please type it into the chat, either here on YouTube or on Rumble or wherever it is that you are watching, and I will do my best to get those questions answered. What I want to get into today, as far as a core teaching, is I want to share with you some ideas around bear markets and strategies, strategic opportunities. I'm going to go fairly quickly because I have a good bit to get through, and I actually have a really tight schedule today because I have to punch out pretty quick and take one of my kids to a baseball game, which is an hour and a half away that he's playing in. So I got to get on the road as quickly as we can here. But I want to hit on these strategies and just give you some ideas. This can create a conversation. You can feel free to email me afterwards or just chat here, put comments in the video section here, the comment section on YouTube or on Rumble, and let me know what you think. And if you want more of these strategies, then we'll do some more of these coming up. But today what I want to look at is I want to talk about how do we thrive in the chaos, and then I want to get into 3 strategies that immediately, if you've not looked at these before, will immediately transition your fear and start moving you into confidence, and we'll talk about some next steps. So before we get into it, I want to just take a quick gauge. I want you to think about yourself right now. In fact, we'll do a little breathing exercise. Breathe deep, release it, and ask yourself the question on a scale of 1 to 10, where am I? Somewhere between Zen, I'm totally great, I'm at peace with the market, I'm not afraid of 1,000-point days that sell off in my face, all the way over to, I'm freaking out, I can't believe it, what do I do? Somewhere on that scale is where you are, and if you just did what I suggested, if you breathed and you measured your number and you said, where am I? Somewhere between completely zen, completely freak out, go ahead in the chat, give me your number. Just type it in there. If you're a 2, you're a 2. If you're a 10, you're a 10. Wherever you are, there's no right or wrong. I just want to get a gauge for where you are. And here's what I want you to understand. I want you to understand, if you want to be successful in markets where there's a lot of fear, in a bear market, you have to be a leader. And leaders see things differently. Leaders don't look at the situation and freak out. Leaders see the problem as it is. They then look at it better than it is. They imagine it better than it is. And then they go take the actions, we often call it aligned actions, to make it as they see it. So if you've never heard me say that before, write it down. Leaders see the problem as it is. They see it better than it is. They imagine it better than it is. And then they go make it like they see it. Now let's compare that to the rest of the world. Here's how leaders compare to the rest of the world. Most of the world on bad news looks like this. They're absolutely terrified. Hippies are just kind of, chill. They think they can meditate their way through it, and that's fantastic, but it doesn't actually solve anything. Leaders, on the other hand, they take it on. They say, I may not have all the answers, but follow me. I may not have all the answers, but come on, let's go. We're going to conquer this. And if you want to have the edge in a bear market, you've got to have the energetic field of a leader. You have to have the attitude of a leader where you say, you know what? Everybody else, just follow me. We're going to figure it out. Let's go. Because what most people do is they look at the fear, they look at everything that's going wrong, they look at all the things that could go wrong, and they want to try to control it. And if you have that energy about you whenever you're trading in a bear market, guess what's going to happen? You will absolutely get destroyed. Guaranteed. That's what's going to happen. So here's the truth about chaos. The truth is great opportunities come from chaos. Great opportunities come from chaos. We don't make money with bull markets. Contrary to popular belief, we do not make money with bull markets. You say, how do we make money? We make money with volatility. And a bear market has just as much volatility as a bull market. When everybody else is in a panic, that's actually the ideal time for you to be buying. When everybody else is in a panic, that's the ideal time for you to be trading and taking advantage of the volatility. If you can keep your head straight, the chaos of a big bad bear market is one of the greatest gifts the market can give you. Hear what I'm saying, lock it in, understand it. There is no fear to be had about a bear market. Bear markets are not good, they're not bad, they just are. In the same way, a bull market is not inherently good, it's not inherently bad. A bull market, it's just a market condition. Bear market conditions are exactly that. It's just a condition. And the key as a successful trader is to be able to adapt to that condition. So let's take an example over here. I want to show you Netflix. This was right before the most recent bullish move happened on Netflix. This was a long-term trend, but I want to show you, when you look at this picture, we make money on Netflix by buying in the green and selling at the red. Buying in the green, selling in the red. This is what we've spent the last couple of weeks talking about. We spent so much time talking about timing the markets and trading trends and the Pick Winning Stocks Challenge. And if you could identify a trend like this in the green circle and trade it up to the red circle, is there any reason you can't make money? Of course, the answer is no. That's exactly what we want to do. Okay. Now, when you compare this is massive volatility. Okay. This is a trade that went from 120 to 360, back down to 240, up to 680, down to 160, and today it's over $1,000 a share. For most people, they look at Netflix and they're like, oh my gosh, this is a roller coaster. I can't handle the emotions. But when you compare it to something like this, it's really hard to make money when the trade just keeps going from 12 to 14, 12 to 14, back and forth, back and forth. Can you do it? You can. There are strategies to make money with a stock that's stuck going 12 to 14, back and forth. There's certainly strategies to do that, but what makes a lot more sense is to jump in here, learn to identify the trend, and trade that huge move from 120 up to 360. That's a $240 move. Then either get out or find a way to trade the downside, jump back in at 280, ride it up to 680. It's a freaking $400 move. And that took 2 years. But here's the crazy thing. When you look at the chart, what happened on the right side of that? In 6 months, the entire $400 move that took 2 years to gain disappeared. That's what I want you to see from this chart. From September of 2019, all the way through 2020, all the way through 2021, all the way to the end, 2 years, Netflix gained $400 a share. Fantastic, Netflix. And then it flushed it in 6 months. Most people are terrified by volatility because they don't know what to do with it. But this picture right here is the opportunity. This thing that you fear. It's like if you go back to Stoicism. Have you ever studied the ancient philosophy of Stoicism? Ryan Holiday wrote a great book on this called The Obstacle is the Way. I'll talk about that briefly, a little tangent here. But in Stoicism, it's the principles. And I'm going to kind of sum it up with this idea: the obstacle is the way. The very thing that you're fighting against, the very thing you're resisting, is actually the thing that creates your freedom. So people look at a bear market like this and they say, oh my goodness, Netflix went up $400 a share and then it collapsed in 6 months. That is not to be afraid of. That is actually the pathway. If we come over to current market conditions, which I'm going to do right now, and we just zoom out a little bit, let's say we go to QQQ. Let's get rid of all the extra fluff, all the extra drawings. Just look at the market itself. People are freaking out right now because we're down 20 some odd %, right? People are saying it took us a year Took us all of 2024 to rally from 398 all the way up to 540. Took us a year. If you go a little bit further back, you can go all the way to November when we were 350. But let's just go to January 2024. Where were we here? About 390, 400. And it took us a year to rally to 540. So how much is that? 540 minus 400 is 140 points. And where are we now? We're back at 410. And it did it in 3 months. Oh, this is terrible. Is it terrible? Or is it the opportunity? That's what people don't realize. They think the very thing that would help them, they think is their enemy. And it's not their enemy. It is the opportunity. I can go trade after trade. Let's go back to Netflix. And I'm going to show you now an updated version of that chart. The chart that we just looked at is right here. I'll even get rid of these moving averages so you can't see them. This is the chart we looked at where it took 2 years to go from 100 and whatever it was, 180, and rally all the way up here to 680, 700, and then we collapsed. And it did it in 6 months. But from this new low, where did we roll to? Well, I'm going to scoot it over and I'm going to show you. Today, we're over 10x. Today, well, maybe not quite 10x. We're at $1,000 a share. But we couldn't get there if all we did was rode the ride higher and higher and higher. That's the misnomer. That's what people think. They think that the market should only go up, but it's not reality. It's not how markets operate. How many times do I have to say it? So how do we take advantage of these markets and actually do something with it? What if there was a way? What if there was a way to profit while the trade is falling at the same time, in the same way that you make a profit when the trade is rising? And the answer is there is. So I'm going to share 3 strategies with you right now. Strategy number 1 is your basic bearish strategy. It's called selling short. When you sell short, here's what happens. When you buy a stock, you make money when it goes up, right? When we sell a stock or we short it, we make money as the stock goes down. That's the only difference. We're reversing the order. When we buy long, we get into the trade and we ride the trend up. When we short, we just do the exact opposite. We sell first and we buy later. Let's come back over here to our Netflix example and notice in that 2-year period of time from the beginning of 2020 all the way through the end of 2022, or excuse me, the beginning of 2022. During that 2-year period of time, we had a $400 rise in the price of Netflix. Then over 6 months, we had the $400 fall. Now, if you bought and held Netflix, you went through an emotional journey and you're probably really upset. Or worse, if you were so afraid to buy early, you waited until it was 600 and you bought at the top. That's what most retail traders do. What I want you to recognize is by being more flexible, by adding strategies like we're talking about today, not only did you have the opportunity to make the $400 on the way up, you had the same opportunity to make $400 on the way down. Combined, trading both directions, there was $800 per share trading opportunity. Huge opportunity. And then, of course, it's rallied from there. It's gone up to 1,000. But we have to learn to be flexible. Now, the million-dollar question that everybody always asks is, can you really time the bearish trade? Can you really time the bearish trade? And before I go further in my slides, I'm going to answer the question by saying, yes, you can. And on this Netflix trade alone, just looking at this one, because it's the one that I have pulled up and because it's the one we've been talking about, I'm going to turn our averages back on and show you. Now, we've been talking about this in our Pick Winning Stocks Challenge. And if you can see it in here, you will notice that we turned green exactly at the beginning of this trend. I will make it so obvious. I'm going to turn off these lines. All you can see is the green and red. We had the perfect buy signal all the way back here at $280, $290 a share. Could we time that? Absolutely. Now, did we maybe, depending on how you chose to trade it, did you have a couple of ins and outs here? Maybe, probably. I remember when we actually traded it, we did. But then we had great buy signals that got us back in at 520, 530. We traded it to the top. And you say, could we have known the bear market? Well, here it was, 640, 620, 640. Multiple continuation gaps on the way down. Could we have known by simply interpreting our indicator that said sell? This indicator is so good. This tool is so good. I could literally come in here and turn off the price action of the chart. You could look at this and not even see what the stock price is doing and still trade it. And over time, you would make money with it. That's how good this Maestro average tool is. Shading it red and green. It's as easy as following a green light, red light. Then you say, well, how do I know when it's done? Well, what about when it turns green again? Now we're done. Could you really have timed this? And the answer is yes, you could have. And we did. We made many of these trades. Many. Those of you who are in my profit picks on Sunday night, you've been in many of these Netflix trades. We've been trading it for years now. Going to turn our prices back on. There's my lines. Turn my prices on so we can see them. So the answer is yes, of course you can time the market. Anybody who says you can't time the market, I like to say, well, maybe you can't time it, but I can. Don't tell me what I can do. Just because you don't know how to do it doesn't mean that I don't know how to do it, because we do. Can you really time a bear market? And the answer is yeah. You know what? One more I want to show you here just to illustrate this point. SPY. Just recently on SPY. While people are freaking out about the current bear market, and honestly, it's been more bearish than I anticipated. That's the beautiful thing about these tools. These tools, like our Maestro moving average tool, because they're so good, they get us in and out early. I knew we were going to have a little bearish market. I didn't know how big it was going to be. Okay? But this is SPY. We were getting sell signals up here. 595. Could we have timed that? Yeah. Did we? Yeah. Did we make some bearish money? Yeah. Even made some bullish money on the counter move, believe it or not. But can we time a bear market? And the answer is yeah. Take a look over here at QQQ. We got our signals up here at 515, 520. Can we time a bear market? The answer is yes, absolutely. And it can happen that fast because the tool is that simple. All right, let's talk about our second strategy. So strategy number one is to sell short. What if you're not comfortable selling short? That's fine if you're not comfortable selling short. I think everybody should learn it. Everybody, if you want to be a good trader, and I really want you to understand this, there's no philosophical virtue, there's no moral virtue in not selling short. People say, oh, I don't want to be a short seller. I'm betting against the market. No, you're not. I'm betting against the country. No, you're not. I'm betting against the economy. No, you're not. You're being inept. If you refuse to learn how to sell short, you're not betting against anything. You're literally just being inept as a trader. Because long and short are the two functions of trading. So you have to learn both of them. If you trade other markets like the Forex market, you have no choice. You can't make money unless you learn how to do short trades. If you trade the futures market, you need to learn how to do short trades. It's a core function of how the market operates. So you're not betting against anything. It's just the direction that you're choosing. So if you don't want to trade short, that's fine, but you need to learn how it works. At the very least, in a virtual account, learn how to execute short trades, at the very least. And ideally, go at least execute one or two in the real world. Now, it is very important, and I want to put an asterisk here. It's very important that you learn the money management piece that goes with it. With the right money management, selling short does not need to be any more risky than buying long. But if you just think you're going to short it and then just go golf for 3 or 4 weeks and come back and hope everything's good, that's foolish. And I would never, ever, ever, ever tell anybody to do that. That's just foolish. Okay. And that's the reason that most people don't sell short, because their idea of investing is buy and hodl, buy and hold for a long time. Well, if you short and hold for a long time, you're probably going to end up upside down. So don't do that. But if you want to be an active trader, you want to be a real trader, you got to learn how to sell short. Okay. Now, what about if you don't actually want to do it? Well, you still got to learn it. But once you've learned it, now what? Well, now what is we can apply that philosophy of trading the bear market, trading the downside to other strategies, and that's where we want to come to put options. So put options are simply using an option to get us into a bearish trade. So in the case of the put option, it's going to give you the right, but not the obligation to do something. In this case, it's going to give us the right to sell the stock at a higher price. It's an incredible way to leverage your cash. What put options do is they give you the right to sell at a specific price. And as the price of the stock comes down, you have the right to sell it at a higher price. So you're not shorting it, but rather we're selling later something that already happened. We're just reversing the trade. And what it does is it allows you to make money in a bear market. Let me show you. So in this particular case, with the Netflix trade, imagine if you had positioned yourself early, and if the stock went down, you had the option, you had the choice to go back in time and sell it for more after it goes down. You don't have to do it up front. You don't have to short it and then hope it goes down. What if you waited? What if you just bought the right to short it? You never actually have to short it. What if you just bought the right to short it? And then as the stock falls $400 a share, you sell that contractual right, that option, and you profit that $400 a share on the way down. Can you do that? The answer is absolutely. That's what we do with put options. Put options are one of my top 3 go-to strategies for trading bearish trades. Absolutely. In fact, it's usually my top 1, although I do have a couple of others that I use as well. But put options are one of the easiest ways, and frankly, one of the safest ways that you can trade a bear market, participate on the downside, and profit even when things are falling apart. So there you have it. We've got 2 strategies now. We've learned that you can sell short, and we've learned that you can use put options. But there's a third one, and one that oftentimes people forget about, and this is one you can actually do in a lot of your retirement accounts and your 401ks, and this is by using an inverse ETF, or an exchange-traded fund. What is an ETF? An ETF is an exchange-traded fund. An ETF trades like a mutual fund, or it's kind of like a mutual fund, but instead of being a mutual fund that you have to go through a broker with, it is going to trade directly on the exchange like an individual stock. So it's kind of like a mutual fund, but trades on the exchange like an individual stock. And here's the good news. It's way better than mutual funds. Essentially, an ETF is a fund that trades exactly like a stock. Now, what's an inverse fund? It's the backwards version of it. It's an ETF, but instead of trading a long position, the fund itself holds a short position, and this fund is going to go up when the market goes down. And why is that valuable? Here's why. Using an inverse ETF, you don't have to ever trade short. Using an inverse ETF, you don't have to take the risk that people are opposed to trading a short position. Instead, you can buy this as a long trade that's going to go up in a bear market. Let me show you. This is SDS. It's a short version of the S&P 500. And you're comparing it to the S&P, which SPY, and you can see when the market goes down, SDS goes up. I'll show you right now. Live market, real time right now. If we look at SPY, it's been tanking. How many of you can see that? SPY's tanking. Direct inverse relationship, SDS. Wow, it's doing pretty good. You mean we could have bought SDS for $19 a share and it's currently at $24.50? Yes, that's what I mean. 20, 25% In less than a month? Yes, that's exactly what I mean. SDS is an option, not a stock option. It's a choice of a trade that you can buy long in your accounts. You can buy it in many of your 401ks, maybe not all of them. It just depends on what the rules are around yours. But you can buy it in your IRA. In each self-directed account where you can trade ETFs, you can buy SDS. And when the market is collapsing, you can position yourself with a long trade in a nice, safe ETF that you're comfortable with and let it ride the bear market as high as it needs to go while the market's crashing all around you. That's why I say bear markets provide the opportunities. There's opportunities everywhere. Now, let me give you some benefits of the ETF. Number one, it trades like a stock. It's easy to get in. It's easy to get out. You can trade it as many times a day as you need to. You could even day trade it if you want to. You can't do that with a mutual fund. This is a benefit of the ETF. You can be long, you can be short. And as I've already said, you can use them in your self-directed retirement accounts. So SDS is a benefit for you because it's an inverse fund that will go up when the market goes down. How cool is that? Now, I'm going to give you a list of inverse ETFs that you can start working with right now. I'm giving to you here in just a second. But before we do that, I want to ask you, where are you now compared to 20 minutes ago when we started? 20 minutes ago, I said, give me a ranking. Where are you on the freak out scale versus Zen about this bear market? And now that you've seen, wait, I got strategies, I have options, I have choices that I can do in a bear market. Where are you now? Are you feeling a little bit more peace of mind? Let me give you some next steps, and I'm going to give you a list of these inverse ETFs that you can start working with. I think I am. I may have left this slide out. I thought I put it in here. You know what? Stand by. I want to make sure I'm giving you this list. So let me check, because right now I'm feeling like that list should have been right there. So let's just look and see, where is my list? I skipped it. That's why. All right. Here's my list that I wanted to share with you that I accidentally skipped. Here's some relevant ETFs for you to take a screenshot of and start working with. If you want an inverse fund for the Dow Jones Industrial Average, look at DOG or DXD. Personally, I like the 2X funds better, but that's another conversation. DXD or DOG. If you want the S&P, SDS is the one I recommend. That's the one I like to work with. NASDAQ, QID. These are all 2X funds that I like. The Russell, either RWM or SRTY. For the technology sector, you can do REW. For the financial sector, FAZ. For the energy sector, ERY. And so what you can see here is you can see when you start working with inverse ETFs, you can position yourself to make a profit in a bear market while the rest of the world around you is freaking out. There's no reason to be freaking out. So here's my question for you. I want to do a quick self-assessment with you. Based on what we've learned so far, where are you? What action do you need to take? Do you already know what you need to do? Just so your action is just you need to do what I already know to do? Is your action that you need to wait and see what happens? Is your action that you need to learn more as quickly as possible? Or none of the above? And you tell me. I mean, you can even put it down in the chat. Be great. Where are you in terms of understanding the ability to make profits in a bear market? Just do what you know to do. Just hold on. Let's see what happens. Learn more. Or maybe somewhere else. If you are the third one, you want to learn more and you need to learn more, obviously our daily live streams here on Trade Maestro channel are going to be super, super valuable. But the other thing that's going to be valuable is to get over to TradeMaestro.com and get you a Trade Maestro membership. Let me talk to you about that really quickly here. With a Trade Maestro membership, I can teach you everything you need to do all of this the right way. It's a monthly membership. You can cancel anytime. And what you're going to get is you can get live weekly analysis every Sunday night, complete with our recorded training library. And in the training library, we have literally 400 plus videos, probably, 35 courses, where we go through all the different disciplines of trading. And so inside all those disciplines, you can learn everything that you need to participate, to take advantage of every market condition. In addition to that, we do twice a month live monthly group coaching sessions, and you get all of that included with your monthly membership. So the monthly membership is very affordable. It's only $97 a month. But I do have something very special for you right now. This is a this week only kind of thing. Everybody who enrolls right now with an annual membership, that's going to be, you're going to save a little bit of money because it's $970 instead of $97 a month. So you can save 17%. But here's the really cool thing. Everybody who enrolls right now, you're going to get a free one-on-one private coaching session with me. It's a $500 value. It's what I charge for my private coaching sessions. And by the way, you can't just buy one of them. You have to buy them as a bundle. So it's really, really valuable to be able to get on the phone with me, get on Zoom, and look at your situation and talk through it. And in addition to that, I'm going to give you the Maestro indicators that I showed you today. I'm going to give them to you as part of your membership. So you can make it as simple for timing a bear market as red light, green light. And in our private one-on-one coaching session, if you sign up for that, I will literally go into your computer with you, sit over your shoulder, and help you get that set up in TradingView so that you can use those. And by the way, you can get a free TradingView account. So there's no reason to not do it because I'm going to give it to you for free. So if you're interested in that, you're ready to take it to the next step, then get over to trademaestro.com, get signed up for a membership. And like I say, anybody who does an annual membership this week, we'll be giving away a free private coaching session with me. If you got any questions, please send me an email, help@trademaestro.com, help@trademaestro.com. If you haven't done so already, obviously it's time. You better like and subscribe right now. Like and subscribe to the channel. It's time. If you're over on Rumble, like and subscribe, follow, I think is what they call it over on Rumble. Do that over there. If you're over on Facebook, wherever you are, do whatever action is necessary. Thank you for being here. I look forward to seeing you tomorrow. I'm going to give you some more hot tips tomorrow and new things that you can participate with. Until then, I wish you the best. Happy trading. We'll talk to you soon.